new climate technology is extremely hard to insure. These venture-backed startups, they're ready to get their project out the door. They keep having to lock up their capital with letters of credit, escrow accounts, and they have worked really hard to raise that venture money. And to lock up that capital is so difficult for them. So if we issue them a surety bond, it's so much cheaper for them. So they can unlock that capital so that they can focus on actually getting these technologies out into the market. Hi, I'm Amy Antczak from GreenieRE, and this is the future of insurance.
Live from the floor of ITC Vegas 2025.
Amy, it's really good to sit down with you. We did meet over Zoom a while ago, so in person, always exciting. Thank you for taking some time out from ITC. Very busy day.
Thanks for having me.
I would love for you to share with people what is GreenieRE, and maybe before that, who are you and your background?
Sure. So I'm Amy Antczak, COO at GreenieRE. Before that, I've been in the insurance industry for about almost 2 decades now. I have a legal background, but was working at large carriers for a number of years, AIG, CNA. And then about 4 years ago, I left to join an insurtech, Energetic Capital. I was there for about 4 years, and then my co-founder, Jeff McCauley, and I, we broke off from Energetic Capital to form GreenieRE, and we still work with Energetic as a partner, but we've been up and running since January.
Okay, and so now the fun part is, what is GreenieRE? What's the focus?
GreenieRE is a new reinsurance company. We are focused on decarbonization, and our mission is to remove bottleneck risks that are holding back the deployment of decarbonization infrastructure.
So the projects, the risks that stop the projects from moving forward?
Exactly.
Okay.
So types of risks that, keep a project from moving forward because they're not financeable, they're not bankable, or because insurance companies deem them to just be too risky.
Are there examples of what might fall into that?
Sure. I mean, just basic property and casualty insurance. When you have any sort of construction project, there's a whole litany of insurance policies that you have to have. And depending on where the project is, where it's located, how big it is, all those sorts of things depend on whether an insurance company will insure the project and how much it costs. And sometimes it's just, insurance is a binary, right? You can either afford it or you can, or you can't get it. You can get it or you can't. And so sometimes project developers just can't get the types of insurance that they need in order to move forward in a particular location. And so, we want to make sure that the whole gamut of risks that come along with renewable energy, we want to be able to cover those or help the traditional insurance carriers cover them so that they're actually accessible.
So reinsurance. So you're supporting the primary insurers so that you're sort of carving out that bit that leaves them feeling insecure about taking that risk?
Right, and we have a number of options of how we could do this. So far, we've been doing some quota share, some facultative deals, and we're open to taking a first loss layer if that's what will get the deal over the line. So we have some options as a reinsurer, which is great.
So where does your capacity sit then? Is it like a Cayman Islands thing or Bermuda? Or like what's the structure look like?
We're a Vermont reinsurance captive.
Okay.
Yeah.
I'm curious. So we don't get a lot of reinsurance startups in the industry, and then you've got the niche focus even more so. But I'm curious, was that the first idea for how to solve for this, or because I think like the natural. I mean, you have a background in insurance, so it might have occurred to you, whereas an outsider may not have even realized there was such a thing as reinsurance.
Yeah.
But yeah, sort of what sparked the notion of this is the vehicle to make this viable?
Yeah, so the background of GreenieRE really stems from our experience with insurtechs and climate-focused MGAs. And so Jeff and I, coming from Energetic, it's a fairly small world of climate-focused MGAs, so we've been talking with them for a long time, and everyone sort of has the same issue in terms of not being able to get enough capacity. Whether it takes, up to 2 years to just get capacity to begin with for MGAs, oftentimes, and other times, once you get it, there's usually line limits. So like at Energetic, we started with one solar project on one roof. We could get enough capacity to cover those, right? But as we get utility scale wind farms, one insurance carrier is not going to be able to cover that. And so we just kept hearing over and over that additional capacity was needed. And so started thinking about an insurance company.
Yeah.
But then when we researched sort of what was the best way to do this, we realized that reinsurance gave us a lot more flexibility,
Yes.
speed to market, and we went with a Vermont captive in an industry association captive, but one of the main reasons was that it's speed to market.
Yeah.
We wanted to get this up and running. We know for climate risks, we don't have a lot of time to waste, and we wanted to get going.
Yeah.
And so, when we spoke with the regulator in Vermont, they said it would take 30 days to review an application.
Yeah.
Other departments of insurance we knew would take upwards of a year. So
Yeah, I mean, I would give Vermont credit. I think they've done a really good job recognizing they have a position in the captive market.
Yes.
And not squandering that, like actually investing in making the right support network within the
Yes.
state to help it to thrive, and it's done well.
yeah, I mean, I have nothing but great things to say about Vermont because they've just been such a great partner so far. I mean, last year, so 2024, the Vermont Captive Insurance Association conference, we went there with an idea of GreenieRE and basically just started talking to everyone saying, does this make sense? Is this something we can do? And not only could I meet with the regulators and sit down and have a conversation with them, they were so accessible, but they were like, well, this is a little different than anything we've seen before. It's a bit outside the box, but we love it. And we will work with you and we'll figure it out. And it's just so nice to hear that from a regulator,
That's a really good moment of, having been on the traditional carrier side, the perception of the compliance question, the regulatory question, is one of no and difficulty, which it certainly can be, but that doesn't have to be the only path.
Yes.
And it takes two to tango, so you have to have reception on the other side, but how are you engaging with that other side in the first place? And,
right.
There are states where things are starting to move and there's a willingness to have that conversation about what we've never done before and whether there's a way to enable it.
Yeah, it was just honestly so refreshing to have them say, we have these rules, we have regulations, of course you need them in insurance, but let's figure it out. Let's work together. And, we told them we want to start with one MGA, we want to keep adding new MGAs, different lines of business, we want to cover every climate related risk under the sun eventually. And they were like, great. Just, keep in touch with us, keep us updated, amend your licensing application, do a different business plan, and so far it's been great because we just engaged them and they asked questions and we figured it out. Yeah. So it's been great.
So I think you answered a question I was going to ask is, who then are you reinsuring? Is it the kind of the energetics of the world, the startups, the MGAs who are focused on that risk, or is it you mentioned where you came from, like the traditional carriers who maybe aren't comfortable with aspects of that risk and would seek to carve it out, or is it both? Or
it's really both. So we're really open to anything. So far we've been working with MGAs. We're also talking with MGAs and more traditional carriers that have sort of the standard P&C coverage, but it's specifically for renewables and other types of climate risks. So that's been great. And then we also launched our own surety, renewable surety project. Program, excuse me. So we're using a fronting carrier, so we're the reinsurer, but basically we're offering surety bonds to renewable energy project developers. Because a lot of these types, we hear from brokers over and over, there's just not enough interest in the space from traditional surety insurers. And
Excuse me. If you see someone coming, can you just stop them? That happens every year. It blows my mind. I actually had a guy stop and just pull out his phone, and I'm yelling to him. Not today.
Oh my God.
So I'm trying to think where to take it back to. I'll take the whole question back.
Okay.
Okay, if you don't mind.
No.
Okay. So are you looking to support the MGAs and the kind of, like we said, energetic and that kind of, I know they're not an insurer, but insurers, if you will, not necessarily carriers, or are you thinking about the traditional players who might need to carve out because they don't understand the risk or they're uncomfortable with it? Is it both? Is it something different entirely?
Yeah, it's really both. Okay. So we've been working with MGAs that have these climate risk programs, but we're also talking to more traditional carriers that have, let's say, P&C coverage for the renewable energy space, simply because there's just not enough capacity for any of those types of products. And we also launched our own surety bond program in which GreenieRE provides the reinsurance through a fronting carrier to issue surety bonds to renewable energy project developers.
Interesting.
And so basically we've heard over and over from brokers that these are pretty standard products. Sureties are very well understood in the market, but there's not as much appetite for renewables or clean tech. And so us providing that option really gives brokers more opportunities to place that kind of business. So we have surety bonds for renewable energy projects, but we also launched another program called Venture Surety. And so this is focused, it's surety bonds, but for venture startups.
Okay.
So for climate tech, because new climate technology is extremely hard to insure. And what we found is that these venture-backed startups that are, moving along, maybe they're in Series B, Series C, they're ready to get their, maybe their first of a kind, maybe their second of a kind project out the door. They keep having to lock up and trap their capital with letters of credit, with, escrow accounts, and they have worked really hard to raise that venture money, and to lock up that capital is so difficult for them. So if we issue them a surety bond, and it's more risky, so we can price it accordingly, it's still so much cheaper for them, so they can unlock that capital and use it for operating expenses, for launching, for scaling, so that they can focus on actually getting these technologies out into the market.
Tying up venture capital for statutory purposes does not generate the return those VCs need.
It's so painful. And at Climate Week a few weeks ago in New York, I was speaking with a project developer. I think it was a type of new hydrogen technology, and he was like, I just need a way to access my cash. Like it's all trapped. And we said, hey, have we got a product for you? So really, it's something we've heard over and over, and we're really hoping that this can help.
I've got one more question for you at the risk of getting a little bit political, which I'm trying not to do, but it's a really difficult time from a clean energy standpoint. Projects hitting defunded, canceled, et cetera. There's a backlash against it. I'm an EV driver, but I don't have one of those bumper stickers because I don't have a Tesla. What is it? Is there such a gap in the supply that, from the protection standpoint, that it's actually fine for you, and there's still way more demand than there is supply of risk capital? Or are you seeing the demand dry up or pull back, and so it's making it more difficult for you establishing and growing your own business? Like, where is that balance right now?
Yeah, so it's obviously, we wish that some of the incentives that have been pulled back were still there for, the ITC, the PTC for solar and wind. But the fact of the matter is there's an electricity crisis in this country with demand from data centers, from AI, from just people using their air conditioning more because of climate change. And so the only way that we're going to meet that demand is with renewables.
Sure.
Solar is the cheapest form of electricity. It's also the fastest to get implemented on the grid. And so renewables are really the only way to do it. The demand is still there. People are still doing it. And that was something that was nice to see at New York Climate Week, is that everyone, it's the same people. We're still working on this. We're still working hard, maybe just being a little quieter about it because of the current political environment. But we also think now is the time that insurance can be a solution, and try to make these projects a little bit more bankable, a little bit more financeable, and help them get over the line when we've lost some of the financial incentives that were there before.
That's a good point. Is like, even if some of the project volume is down, the need for that help is higher.
Right, exactly.
So maybe it's I do think it's short term. Because ultimately, like, the problems are still the problems.
Right.
And the amount of AI-related energy consumption, even if you want to argue against climate change and whatever else, like, clearly there's going to be way too much energy demand.
Right. From a strictly economic perspective, putting aside climate change, it just doesn't make sense to get rid of renewables and not pursue as much electricity that we can get on the grid. And again, renewables is the easiest way. Yeah. And cheapest.
Yes. And you can still breathe.
That's also important.
Which would be a really nice
thing.
Thank you so much for, not just for the time today, but for what you're building, because
thank you.
It does matter, and there is a need for more support, because it's risk that's not, it's not vanilla and it's not old, and so it's tough to find that protection. So I love hearing stories of other ways to create that. So thank you very much.
We think insurance can be a force for good. And so, we think insurance is one of the many solutions to climate change. So let's work together and do it.
Save the world, no pressure.
No pressure.
Thank you so much.
Thanks for having me, Bryan. I really appreciate it.